Joining us now is Broughton Capital founder and managing partner Donald Broughton. Donald, great to have you on the show. I want to get your initial reaction to the results we just got, the fact that revenue did miss. But if I actually look to fiscal 2024, FedEx is forecasting flat to low single-digit % revenue growth year on year, which looks better than the street had expected. EPS basically in line with expectations for the fiscal year as well. Your thoughts?
Well, I think that there were many of us out there, myself included, that were looking for a surprise at the upside in the guide. So that's the sense of disappointment I think you're seeing in the shares afterwards, because I think there's just so much leverage available to the company after the cost reductions they made and their ongoing effort to steal market share from UPS as UPS negotiates its new Teamsters contract. All those things are going on at once. The other thing is you got to remember that this stock is infamous for moving ahead of time. Again and again, how many times more you and I have talked about this, where the whisper out there is they're gonna beat and raise, they're gonna beat and raise, and the stock moves up by 15-20%, and then they beat and raise, and the stock's down by 5 or 7%. And the exact opposite happens where, they're going to miss and lower, and then they do, and the stock goes up. So there's some of that, because 2 weeks ago you could have bought as many shares as you wanted to for as low as $215 a share, and obviously the stocks have been as high as $235 through $36 recently.
Yeah. We know there's a lot of pull forward in terms of e-commerce demand with the pandemic, and it affected everybody. But I'm just looking here, ground volume's down, again, year on year, but the decline less than the decline we saw in the previous quarter. And actually, ground prices, looks like those are up 5%. So just to get back to the UPS and the Teamsters negotiations that are happening there with that union basically voting to authorize to strike if need be as soon as August 1st. Is FedEx taking market share? When will we know FedEx is taking market share?
Well, you'll know definitively after it's too late and it's already been done. But I can assure you that it's being done right now. They're taking market share for one simple reason. Nobody who routes freight for a living can ignore the potential of a strike. And you have to shift some volume over because otherwise, if there is a strike, God forbid, you're going to get fired. And that's the bottom line. And once that share is shifted, you don't go back unless somehow FedEx drops the ball on service. That's just the ethics of how that profession does its job. And it happened. It worked last 5 years ago for FedEx, and FedEx's behavior was interesting. They raised, in that time frame 5 years ago, they raised the price per package by over $1 in an environment in which UPS only raised it less than 50 cents, and yet they still gained market share. And I think the same thing is going on right now, and you're looking at that yield improvement. That's including the reduction in fuel surcharge. So if you look at the base yield that they actually got, it's actually higher than that.
Okay.
And, that's the reason why you're seeing margins continue to march upward for ground.
Donald, give me your perspective on these results in the context of what we see happening in the broader economy. Because it seems like for a couple quarters now, at least, we've seen people buying less stuff for more money. And it seems like FedEx is shipping less stuff, but able to charge more, at least in ground prices for it. What happens when the comps get tough on those ground price increases, or can they just keep raising them, right? And they could keep raising them, because remember that they're moving high value, low density goods. They're not moving coal. They're moving. But is there a limit?
iPhones. I would argue with you on what we're buying. I would say that there really are two economies here. There's the international trade economy, and then there's the domestic economy. Onshoring is a real trend that's gaining momentum. And understand that the largest producer of revenue for FedEx is still Express. So when you have China, emerging now after completely shutting down cities. And indeed, it's coming back. It's less negative than it was.
Right.
But international air freight volumes, instead of being down 25-30%, are only down 10-15%.
China's weaker than some had hoped. And I wonder, especially heading into holiday, where, the consumer might be kind of stretched, price sensitive. Like, how much can those can those ground prices be raised here? Is there a limit? Are we close to hitting it? Or is that
no? I don't think we're close to hitting it. Think of it this way: if I'm sending you a $1,300 iPhone, does it really change the value of that delivery if I charge you $20 instead of $15 to deliver it? Not much. I'm not delivering toilet paper or something in which the cost of delivery is half the cost of delivery. What they deliver by definition, the reason you air freight something is because you're air freighting something that's high value, low density. A diamond ring, an iPhone, a new tech gadget. It's something that is high value, low density, and so in the cost of goods delivered, the cost of delivery is a small percentage. You care more about service than you care about price.